What is going on, everyone? Welcome back to the channel. Happy Sunday. It is October. Finally, Q4. Hope everyone is ready. Hope everyone's excited. I know I am. I'm a very big advocate of this. I mention this on my live sessions I do every morning, that self-reflection in the trading space is super, super important. I actually have my notes over here that I write on every day. Every single day I write on my notes simply to reflect back on. Looking back at September, how could I have traded differently? How could I have managed my positions differently? How could I have managed the current macroeconomic climate better? And that is the only way you're going to grow in this space. So, regardless of what's happened to you the past 9 months of 2022, no matter how good, no matter how bad you did, I want you to push it to the side. Even if you killed it, push it to the side. We're on a new playing field right now, new month, new week, new quarter. It's time to get it. For myself, I am very, I wouldn't say cautious, but I tread carefully, shall I say, when I am trading at the start of every month, the start of every week, simply because you don't want to put yourself in unnecessary drawdown. And I've seen a lot of traders do this. I've been fortunate enough to work with thousands of traders all across the world. And the biggest issue with traders is that they start the month, they start the quarter or the week very aggressive. Why? They've used this self-reflection as a boost of overconfidence. They think, okay, fine, I've gotten over my little bad habit. Let's go for it. That optimism and that over-enthusiasm tends to lead to over-trading, over-leveraging, greed, and so forth. So, my advice for all of you watching this right now, take your time, right? Give yourself room to breathe. Give yourself trading, give your trading a lot of space, right? Especially when you're starting out, the new week, new month, new quarter. Have some blue on the board or some green on the board. Get some numbers on the board, then you can start managing your risk as you go from there. What I mean by that is wait for further confirmations, right? I know trading can be boring when you do follow all your rules, but that's how it should be. The minute trading gets exciting, you're either not following your plan, you're either risking too much, or you're trading with more than you can afford to lose, and you're always anxious and nervous. So eradicate that. Make trading easier for yourself. Give yourself a set of rules that you can follow, that you're willing to follow, in order to then reward yourself at the end of the month or the end of the quarter, whatever that may be for yourself. But very, very exciting times in the markets right now. We have loads of macro events that are panning out right now. This past week, we had the Bank of England slightly pivoting to what was expected. Everyone was anticipating an emergency rate hike down road A, right, to fix inflation. They opted for road B. They literally just went another direction. That was pretty much to help all pension funds in the UK that were facing margin call, which isn't really something to laugh about, but very, very scary. That being said, rumor has it, not rumor, but pretty much market talk right now has it that the Federal Reserve may start to slow down. Does that mean their hiking cycle's over? No. Does that mean we are still possibly going to have further upside in the dollar? Yes. That is just a case of where and where from. So let's jump onto the charts and go from there. Hope you enjoy the video. Do watch till the end. I have a surprise and we'll go from there. Take care. Right, dollar at the forefront of everything I do. Be that if I'm trading equities, commodities, cryptos, anything, any major, any yen pair, I want to know dollar's positioning. Right now on the weekly time frame, dollar has rejected out of that high of 112.76. Right, we rejected out of the high. We understand this was a 2-year level, right? And we know whenever a market pierces into relatively fresh territory, we are going to have those corrections. So it is good to see dollar has sort of peaked out of the high around that 114,800 level. And this is purely because the Bank of England decided to pivot. Pivoting simply means they didn't raise interest rates as expected, and the market's obviously pricing in and expecting the Federal Reserve to possibly do the same. So dollar out of the highs, but for myself, I'm remaining bullish. I understand that where we are right now, we have had those peaks and those troughs. We have possibly just had a peak now. We're looking for that trough. So anywhere for myself into the 110 handle. I like the 110 round psychological level purely because we can see the dollar has corrected several times throughout this cycle. It's due another correction, right? It's due another correction. We know the Federal Reserve's nominal rate target is around 4.5–5%, and they're more than likely going to get there from, let's say, now till next year, June. So you still got a good 9 months, in my opinion, before a full pivot from the Federal Reserve, or a slowdown, so to speak. I actually posted a picture this morning in my group, I'll put it over here, that recessions are more than likely the best tool to bring inflation down, regardless of how high that inflation is. So with the current inflation narrative that we have, pushing the economy into a recession might be the only option to get out of this. So you might as well just get over with the pain, right? Push the economy into recession and bounce back from there. The only way they're going to do that is if they continue raising interest rates. And that being said, if I know the positioning on the dollar, I can look at the likes of euro positioning nicely for a retest around parity, right? I still see euro trading lower. So for myself, I'm looking to sell this possibly into the new week from 99.50 or even parity. Parity being €1, $1, looking to possibly load up on some short positions from there. You got cable. Cable had that immediate recovery out of those lows simply because the Bank of England stepped in, right? Simply because the Bank of England stepped in. Technically, in any other situation, if a central bank provides quantitative easing, which they did, the currency would have weakened. But in this case, the market obviously viewed that as a potential Federal Reserve pivot. So dollar got hit, cable rallied higher. For myself, I still see this as bearish, right? There's nothing bullish about this. So I would personally ignore all the little arrows. Yeah, this is just lower time frame work that I do on my London sessions. If we were to get 114, I would love to be involved in a short position from there. That lines up beautifully with my Fibonacci region. And then we're obviously capitalizing on that dollar strength once again. That lines up with dollar hitting 110.50, 110, anywhere between that region. So constantly looking at that and monitoring that one. Dollar yen, I was in a short position last week on dollar yen. Fairly slow on the high, right? Fairly slow on the high. But I do expect some Bank of Japan intervention to follow suit. So just to explain this move was an announcement from the MOF, the Ministry of Finance, and the Bank of Japan, that they would be intervening in the form of buying the Japanese yen using their dollars that they have in storage, which obviously ignited this massive drop across the board. I know pound yen recovered that big drop. Euro yen recovered most of its drop. CAD yen successfully with that drop last week. I actually hit my target early on in the week, but because of oil. But looking at dollar yen, we know dollar yen is pretty much the index for yen pairs. I would just say this announcement for intervention was not intervention at all. I do think intervention is still yet to take place, more than likely the first half of next week. So we could expect an equal but opposite move to the downside. So my downside target, so what I mean by that is I would measure this move, right? Even if you want to fib it. And then that lines up beautifully with 139. So 139, my overall target for dollar yen. Should we have that dollar reversal to the downside, right? Back into 110.50. And we do have that Bank of Japan intervention, then all yen pairs are going to suffer a massive, massive rollover. So if you want to be safe on dollar yen, I would just say 144 has to break. So I'll go ahead and add an alert on that with all of you. 144 has to break. Right, once that breaks, we're in the money. We're clean for a short. What you can just do is wait for that break, wait for that correction, wherever that correction may be, possibly into 144 or slightly higher. Then we already know we can use our fibs on the lower time frames to then capitalize on wherever that lower swing high may be, to then ride price even lower. So that's dollar yen. Pound yen, very, very similar scenario. I do expect 164 to come and get hit again. But as we've said, and I'll carry on saying it, I'm not looking to buy pound yen. I'm looking to sell it. That's all. It's just a case of where I sell it from. So we'll look out for that one. Euro yen, very, very similar. I had a short position last week, and I'll be looking to sell that again. CAD yen, same thing. Should this level of support break, right? Should that level of support break? That was a beautiful little short position. I actually got out earlier once we started slowing down at this level of support. But I left my risk reward tool on there just for educational purposes within my group, my live session group. So good to see that price has rolled over overall. But that was obviously following the oil decline that we had towards the latter half of last week. So beautiful little correction there on oil, straight into $83 a barrel. In terms of risk and equities had a bit of a rollover on Friday towards the close. That was a very bearish monthly closure on the Dow, closing back below 30,000, which was the lowest monthly closure since February, or pretty much last year, start of last year. So yeah, I think 2-year lows on the Dow, 2-year lows on the S&P 500. I have an S&P 500 video that I just dropped. And then yeah, gold as well, 1660. It's got a lower time frames for this one. We obviously rejected nicely out of 1675, but there again, there's nothing bullish about this. For myself, with the current narrative, we understand dollar firm, risk off. We want to be selling all risk assets from whatever price we get. So gold, oil, equities, dollar yen, everything, right? Pretty much short everything. Bitcoin right now resting around this 19k handle. I'm ever so patiently waiting for this to break. I do think, the market has, in my personal opinion, just slowed down here at this inside bar. An inside bar is an impulsive move in a certain direction. Should you get an equal but opposite move to the downside, then you can expect that rollover. Looking at that on the 2-week, you can see price had that massive drop. We've just slowed down at this region. Looking at the prior weekly candle closure or 2-weekly closure, price is extremely bearish, engulfed the prior 2-weekly candle closure. So I'm expecting this low to get broken, the 17,700 low. Once that low breaks, see you later, mate. Yeah. For myself, I'm pretty much expecting this whole bull run to get evaporated, in my opinion. Why I say that is, and just looking at equities as well, I favor the S&P to come back into where the market was trading pre-COVID stimulus. Dow Jones, I'm looking for the market to come into where we were trading pre-stimulus, right before COVID. Same thing with Bitcoin. If you look at Bitcoin, I personally think we had this irrational, maybe irrational is not the right word, but we had, in my opinion, an overly sized move to the upside due to the stimulus. People were receiving these stimulus checks in America, trillions of dollars that pumped up the markets across the board, right? It was mainly used with the idea to prop businesses up, but if I have to look at Bitcoin overall, I wanted to come back into where we were trading pre-COVID stimulus. You look at this bull run, was all the way through the pandemic, right? Basically all the way through the pandemic. Once Federal Reserve has obviously started tightening to bring down inflation, you've had this almost this whole movie raised. So if I have to look at that from a broader spectrum and say, fine, do I expect Bitcoin to sustain around this level of support, or is that what everyone wants? Every single person that's shouting Bitcoin to the moon wants this level of support to hold. What's probably going to happen? It's not going to hold. So for myself, I expect 10k. All right, 10k, if not lower. Anywhere between, I would say, 12k and 10k. If you want to start averaging your way in, feel free. But in no way, shape, or form do I think any asset that got inflated due to the COVID stimulus is going to last. Those moves have to be erased. If what the Federal Reserve are doing right now, tightening their monetary policy, raising interest rates to bring down inflation, that inflation was caused because of the free money that was printed, the stimulus, QE, right? Quantitative easing. You go ahead and unwind all of that. You're going to have to unwind a lot of these assets as well. So a lot of these risk assets are going to trade a lot a lot lower. Ethereum, obviously, you know my point of view on Ethereum. I think this is going to trade a lot lower. I'm expecting this back at around 700, 600, 700. Would I consider buying there? Possibly. Yeah, start buying some more again from those levels. I just think a lot of people have been manipulated into ETH on the merge, right? What was the merge good for, right? Not much, clearly. So yeah, beautiful little bearish Fibonacci on the merge. The merge optimism obviously hyped ETH up, and now it's trading 30% to the downside. So whenever there are these non-rational, so irrational events, just ask yourself who's benefiting most from this. So yeah, for myself, Ethereum back to anywhere between $600 and $700. XRP, there seems to be rumors that the SEC case has sort of improved. Documents have been leaked and so forth. Do I think we're going to moon now? It would be great. But I just don't like this price action. I just don't like this price action. Could this be the new bottom? Like, could this level of support around 39, 40 cents be the new level of support to possibly start averaging in? Look, I think if you can afford to dollar cost average, I would say anywhere from the high of that level of support being 33 cents and the bottom being 14 cents. If you can afford to sit in, like, worst case scenario, 50% exposure to the downside, obviously for that upside risk or for the upside potential, then by all means, there's such a great risk reward on this. If you were to average in anywhere from, I would say, 33 cents all the way up to the high, you're looking at a 900% gain. So in terms of the downside, I mean, the downside can't be negative. So worst case scenario, if XRP went to zero, right, it's a 9-1 risk reward. So it's definitely worth your money. Starting to average in, if you believe in the project, if you believe in what Ripple are trying to do, should the SEC case get completely dissolved. But then I think if that case gets dissolved, it's obviously going to be good for XRP, but you're going to have them, in my opinion, go after ETH, and you're going to have them go after stable coins. I think with what Fed Chair Jerome Powell, with what Fed Chair Jerome Powell has said recently, there needs to be a regulatory action against stable coins because they all dependent on what? The dollar, right? They all pegged against some stable coin, which is pegged against the value of the dollar. So they all are dollar dependent, whether they like it or not. So in terms of regulatory action, I think too much money has been made out of thin air, right, within this space. So I think the Federal Reserve especially are going to step in. So definitely just think about that. Does that mean they're going to impose high taxes on cryptos? Possibly. Does that mean they're simply going to introduce a CBDC, a central bank digital currency? Possibly. But I just think for myself right now, I want to position myself in the odds are in my favor. So worst case scenario, if we do have further downside, I'm locked in for the upside potential, and I am. It does fit within my financial situation to sit within a bit of drawdown should price trade lower. So I do think as an average, if you were to start averaging in, then feel free. Worst case scenario, price comes and retests this level of support at this area of consolidation, which, as I have said, is the top end of my golden zone. Then start averaging in. Average in and just don't look at it. Obviously, invest money that you can't afford. This is never financial advice. This is purely my point of view. But I think that's it for me, guys and girls, this week. That's what I'm looking out for. My main focus remains the yen pairs. I will continue to monitor that every single day. And then, yeah, profits from that, obviously, invest them into something that you are happy to risk. For myself, I do favor buying the dip in some ETFs over the next 6 to 12 months. And then, yeah, possibly buying into Facebook. I know Facebook is a bit controversial. I know Meta is controversial. But I do believe that what Zuckerberg is doing in terms of the metaverse will propel Facebook's market value. So we can look at that briefly. Meta trading at 135 right now. Down massively, down 65% from the high, so not as bad as Bitcoin, but I do like where it is trading. If I have to just take a mean average, if we have to start averaging our way in anywhere between where we are and 120, it's a great average to have. Should price drop a little bit lower, I'm averaging my way in for when the Federal Reserve pivot. Because you must remember, a lot of moon boys right now in the crypto space are waiting for the Federal Reserve to start printing again. But by the time that gets announced, it's already going to be priced into the market and you've missed your move. So in my personal opinion, what I will be doing, which as I have mentioned is not financial advice, is start averaging my way in. Be that into stocks, be that into cryptos, be that into gold, be that into silver, whatever the case may be. Put your money somewhere else, make some money in FX, put some aside, let it compound, let it work for you behind the scenes. But that's pretty much it for me today, everyone. I hope you all enjoyed today's video. It was quite long, but if you have stayed till now, I love that. I respect that. Thanks for tuning in. Stay tuned on the channel for much more. Follow me on Twitter if you are still watching. And yeah, I'll see you guys in the next video. Take care. Bye-bye.